Good afternoon. I hope you can hear me, and welcome to the post-lunch session. I've been told by the organizers that we are running a bit late, so I'm going to keep this session for about 45 minutes, wrap it up at 3:30 sharp, Mehul. Is that okay? Wonderful. Thank you for joining us. This session is all about money. Raising money, deploying money, spending money, both on the private and the market side. Joined by an esteemed panel. So instead of doing the usual of me reading out paragraphs, I'm just going to quickly run through these guys and let them introduce themselves in a few sentences. Amit?
Yeah, Amit Bakshi, founder of Eris Lifesciences, listed company now. Thanks for the invite. Mehul bhai, thank you. Mehul bhai, thank you. And a lot of labor has been put on you, which was so visible. Been treated very well. Thank you for everything.
Sudhir ji?
Thank you, Amit. Sudhir Vaid. I'm a promoter of Concord Biotech Limited. I'm the chairman and managing director. This is a fermentation-based company, and we got listed in August only. Thank you.
Hi, I'm Sourav Mallik, co-head the investment banking business of Kotak Investment Banking. And it's a pleasure to be here, and thank you very much to IDMA for inviting me.
Hi, this is Kabir Thakur. I run a private equity firm called Creador Private Equity. Mehul bhai, thank you so much for the invite, and thanks to IDMA as well for giving us this opportunity to be at this panel. Thank you.
Thank you all. Kabir, you notice strategically I've placed the two evil PE guys on one side of so there is a reason for that madness. But let's start with Sudhir ji. Sudhir ji, and this is a bit of a loaded question, but I'll still go ahead and ask it. Post your listing now, how has life changed for you personally and for what you are doing at Concord?
Yes, I can say after listing, things have changed a lot personally. Now I am more responsible I can say I'm more responsible to now a million of my, investors. Earlier I was, responsible to only 2 people, but now
So
by
you can see the joy of getting rid of Quadria right there.
So things have changed. And I can say that there is a more hunger now to develop new molecules, develop infrastructure so that we can create wealth for our investors. So that is what I can say that things have changed. But after listing, I can say that the company's visibility and credibility has definitely increased. People from the market, our customers, they are viewing Concord in a different way. Now, people are approaching us for contract manufacturing, and we have got, good market access to the niche markets. And I can say that after listing, our market has also increased. We get a lot of inquiries from even multinational companies. So that is what I can say after listing, the increase in credibility of the company.
Sudhir ji, any changes in the product portfolio, especially now that the shackles of private equity have gone?
I'll say we are good at fermentation, and people recognize us globally. I can say that Concord is a fermentation-based semi-synthetic company, and we have proven that. You must be knowing that earlier 2000, people used to, were scared that going into fermentation is very dangerous. So I can say that we have shown to the people that yes, fermentation is not scary. We should all go into fermentation, and we see that number of people are coming into fermentation now. So we would like to do the same thing what we have been doing. Of course, we have gone for a vertical integration also. We are into oral solid dosage formulation. We are into injectables now. And of course, we are doing a lot of contract drug manufacturing, especially in the fermentation, which in India, people were not there. So that is what we are going to do, and we'll be continuing doing this because the market knows us and we understand that market is going to reward us what we are good for. So we'll continue to do in working on the fermentation.
Thank you, sir. Amit, Eris and you are considered to be marketing. I'm deliberately going to use a provocative word, mavericks. I call you innovators in some ways. Any thoughts on what is your secret sauce? What is it that you guys do which is out of the box, which makes you so compelling?
Is this not a last panel question?
We are trying to make sure that you answer it in a similar spirit.
Yeah, so I mean, most of the things have been said in the last panel. So without much wasting it, I mean, we're very invested people. So from a basic point of view, we're very invested. So for example, since last 2 years post-COVID, it is not happening. But pre-COVID, I used to be there for 2 days, sitting in a clinic and going through, counseling patient for an entire day, just to see what is changing and how things are changing. And, the usual stuff of, differentiating, usual stuff of trying to do something. So I'm not a great fan of the way, we've all been brought up, be like somebody. If a bacha is playing cricket, then he's told to be like Tendulkar or do something which has already been done. So we try and see that as far as possible, if you can stay away from both of this and still make a point for yourself in terms of, good business, good outcomes. That's a space we would like.
Can you throw some light on this equity partnership with MJ Biopharm?
Equity partnership with MJ Biopharm. Yeah, so, the genesis of is I have never been the owner of a company from my point of view. So even today I hold only 42%, 43% of the equity. So I have grown up with people around me. So having partnership, most of the time the question comes acquisition, but I don't really see it as an acquisition. I'm a very partnership pro person, love to be with people. And I have learned from the community that I'm not the person who would aim for a smaller pizza, but all mine. I would aim for a larger pie, even a smaller pie of a large pizza. So we understood insulin is something we want to do. We love insulin. We couldn't do insulin without having some support. So instead of, we thought haggling around, right? I went to his office and I offered him. It took some time. So the question which was asked, Amit, why 30, why not 20, why not 15, why not 35, all those things. But I thought, beyond a point, it doesn't make sense. If it was 20, maybe something more, or it was 35, maybe something less. The idea is, can we combine our resources and create value? So if you are a majority in this, good. Even if you're not a majority in this, it doesn't really makes a lot of difference.
Fair. Good answer. Kabir, for a lot of people in this room who are trying to figure out the good, the bad, the ugly of private equity, is there a right time stage for a business person or a company to seek PE investment? And then also, why should it go to Creador and not to any other PE firm?
Great, thanks. So just let me cycle back a little bit. I joined this industry in 2005. At that time, there was just one company that was more than 5,000 crores in market cap. Today, there are 10 which are over 50,000 crores in market cap. So private equity has benefited massively. Public markets have benefited massively from partnering with pharma companies. So the pharma community itself has made tons of money for the investor community. Coming to your question, I think the right time is completely dependent on your ambition and whether you have the internal resources to do it or not. if you have the internal resources, and that I mean both capability, people-wise, finances-wise, why should you raise private equity? For most of you in this room who've not raised private equity, you're used to making your own decisions, right? I'm sure Amit didn't like being told, you can't do this, so you can't do that. Or Mr. Vaid didn't like being told these are rules and regulations of the game with private equity. So private equity is a double-edged sword. There are goods and bads. I would always say the right time is when you feel A, you need the capital, and B, you need more than just the capital, which is some advice, some ideas on capital allocation, M&A. Going directly if you don't need it, why do it? Why not sort of continue the way you are? The day you reach a point where you say, I can't go further capex wise, or I want to acquire something, that's the time to think of raising private equity. As far as why Creador, I don't want to say just Creador. It's people like yourself, Quadria. Many of us have made good money in private equity, and entrepreneurs have been kind to us, I would say. I'll also say that private equity, they will add value to you, but 90% of wealth is created by the entrepreneur. I think private equity allows you some help on the fringes in terms of capital allocation, decisions, M&A. But I would still say I've been lucky to be part of 4 or 5 investments. The entrepreneurs generally created the value. Private equities played a supportive value. And we're grateful to people like Amit who created a lot of value for me in the past as well. And I would say that in general, when you are looking at private equity, look at 3 things, right? Capital everybody has. The chemistry you have with the potential partner, right? Obviously, seek a good valuation and things like that is hygiene. But when the person's going to show up every month to have a discussion with you, when the person has a say in your decision making, it can go either way, right? It can be taken positively and he comes up with good points. And at times you can view him as a hindrance. You want to acquire something, he doesn't want to acquire it. Then it becomes a little bit of a sort of standoff. So find a person who you gel with. You have to see that person every month, every quarter. Hopefully he's talking a lot of sense and helps you create value along that journey. Thanks, Amit.
Great. Thanks, Kabir. Pivoting a bit to you, Sourav, and this is the investment banking conundrum. So basically, most cash generating companies don't need funding. The ones who are looking for capital are probably not worth investing in. So you as the matchmaker in between, how do you overcome that?
Yeah. Thanks, Amit. It's an interesting question, and I'm going to pick up a little bit from what Amit said and what Kabir said to answer this question. I think gone are the days where everybody can think that they can do everything on their own instantly. I mean, the world today has changed its pace in such a manner that results are required to be shown in a relatively much shorter period of time as opposed to a longer period of time. If I think about myself, look about my job, everything that I did, I gave it to Uday Kotak to do, he would do it in 5 minutes, but he doesn't have the time to do it all, right? So coming back to that, so now there are companies, it is important for companies to have a business moat to be profitable. But there are many points in time in the journey of companies where you want to do something a little bit more. You want to expand into an adjacency. You want to make an acquisition. You want to get into a new geography. You want to get into new products. And sometimes you want extra capital for that. Sometimes you want somebody who's thinking you can leverage on. Sometimes you want somebody else to share a little bit of the risk with you. And in most of all, you want to be able to do this faster than slower. So that's where it comes in. So indeed, yes, while companies may be cash generating, may be profitable, there is definitely still a need and a requirement for many of those companies to seek external partnership as well as in the form of, and it could be anything. It could be, finding a better home, could be private capital, could be public markets, as the case may be. Even when it comes to companies which are not profitable, I think the question is that whether or not those companies have a path to profitability, whether they are on a journey to a certain amount of profitability. I don't think in today's day and age you can imagine that in the long run you can have a company which can survive with no profitability forever. Definitely you need to get to a profitability. So if you're on a path to profitability, yes, indeed, those are companies that with interesting business models will be able to attract capital. That's what I'd like.
No, thank you for that. And Amit, maybe again pivoting to you, you've been now a publicly listed entity for past 7-8 years. Maybe for the broader audience, if you could just share the good, the bad, the ugly of the past 7 years.
It's very individualistic. You know, two people sitting beside each other, one would be finding it very nice, the other might not find it very nice. So I think it's a matter of time. For me personally, you know, I've been on a leash. Very early got a private equity player. So, you know, then things were a little softer. Now things, you know, the same questions in a way, but sometimes people are a little angry, which they have a right to. So you need to have a little more magnanimity. You need to understand that, you know, while everybody say this, but you have to really understand that there is one person who owns 10 share of you worth $500 or $5,000 has a right to ask you a question. And if you understand this basic at a very, at a deep level, then all these pains at the end of the day basically makes you a better person. And if you keep on asking in your head, you know, in a subtle manner, who is he to ask me this? The journey becomes painful. The early you adopt to this mental kind of, you know, if you adopt to this, that look, everybody who is invested in you has the right to ask you a question, and it is your duty and responsibility to answer him. And there's no ego in that. There is no who are you, who am I? Look what I have done, look what have you done. If we can genuinely get away from this mindset and be absolutely open and take nothing to heart, right? And just make sure that this is a moment, just try and understand his agony under, in other form, trying to say how hard it is on you. So if you think of the other person's agony, right? And you know, there is drama, there is melodrama all the time. We know our society has a bit of drama, so that's okay. But at the basic level, if you understand this basic and you kind of live with it and you adopt it and don't force it on you, life is not very difficult. In fact, all these difficult questions do lead to you trying to understand more, understanding the other's, point of view. So no major complaints. Yes, sometimes it gets little, here and there, but that's okay, that's life. So no complaints from that point of view. We understand this is a journey, this is a long journey. Trying to see what you are worth today is a useless thing in my view. Therefore, if you could be listed and still not see your price, then you are training yourself to become bigger than what you are. And because people judge you by price, guys. So please understand this. I'm not kind of joking. I've seen I've seen the same people nodding to you, shaking hand with a different force at a different point of time. So and these things sometimes might play in your mind, but you have to have that nerve of steel. So good for us that it happened to us at a very young period of young age. I started at 31, got my first leash at 34, 35, and then continued in that direction. So the pain had always been less. So from an entrepreneur point of view, you have to understand that you never look at what you are worth today. It actually means nothing if you are selling it, unless and until you are selling it tomorrow. Think of the long term and see, over a 5 years period of time, everybody is pardoned and everybody is rewarded. So it's a matter of time and you have to play by that.
Now I know why you asked me whether I oversee the mutual fund business.
You are also scaring me.
So,
No, I am just preparing you.
Yeah, Amit, very well answered on the good and not so good. I'm still waiting to hear the ugly part.
Ugly is all on you. I mean, you want to make it ugly, you can make it ugly. There's nothing ugly. They have a right. Everybody has a right.
No, but are there any points of being public where you say, "Yaar, I wish ye nahi hota."
Lot many.
So
Amit,
that's
lot
what
many.
they're looking for.
But they are not coming from a point of genuinity. They are all coming from the point of a personality, from your ego, your mindset, the way you process information. They are not coming from a point of genuinity. There's nothing utterly bad from a genuinity point of view. It is the perception, how you process that information, that makes it good, bad, and ugly. That's what I would.
No, well said. Thank you. Sudhirji, you are in a unique situation in this panel and otherwise, where you've basically only had two types of investors. The first was Rare Enterprises, 20-year relationship, still continue to be part of the cap table. And then you had Quadria, who came in and unfortunately for us had to leave at a certain period of time. What I think we would like to hear from you is that when you have an institutional long-term investor and then you have a PE type investor, what have you seen which are the good parts, and what do you think are the differences between these type of investors?
Good question. I'll say.
And I have a thick skin, sir, so say whatever you feel like.
You are my ambassador, I know. So you have been talking all the way good things and hear good stories. When I ask people who has told you, they always say Amit. So I'm very happy that I have a good, not Amit. So good to Amit. So I always say, yes, he's my ambassador. So that shows our relation and how happily you have exited. So I'm very thankful to you. So just starting with Rare Group, Rakesh Junjunwala. He invested in Concord in early 2003, 2004. I don't know what valuation, but it was in 2003, 2004. So I think it will not be fair on my part if I say it was an investment, because after the investment, we got so good relation. It was like a family relation, I can say. So I never felt that he is an investor, or he never treated me as he has invested in my company. He was like a owner. So he invested, I think, around 10% of it. I don't remember that at that time. But I remember also that he used to call me every week, 2 or 3 times. His time was 9:30, 10 always. So he used to call me and ask about the, what sort of products, what sort of development, what infrastructure, what markets. So I can say that it was sort of a, everyday sort of a interaction with him. He was so much emotionally, involved with Concord. I think that's what I could see, that, the way he was working with us. And he believed in me, because he understood that in fermentation, we are very good. So he always encouraged that, we should continue to do what we are doing. And he helped me. I can say I as a scientist, I was not very daring, because I was worked in the scientific only, never into business. So I learned from him that you have to take certain risks, you have to be in the market, you have to be outright, you have to go to the market and develop new products and all that, because he understood that fermentation is not easy. And how we could grow that, I can say that he was helpful in that. He also, he was more interested also that one day we should have a listing. It was very unfortunate that on the day of listing, he was not among us. But he was always, I can say that 1 week before his death, he met me in Ahmedabad. And we discussed about the strategy for the, listing. And he was so involved, although he was ill, but because he came to Ahmedabad for the launch of Akasha, his dream projects. So he spent 2-3 hours with me at that time also. So I can say it was not basically an investment. People can talk anything about that, but I was very happy that the way he has done. And he has left the legacy, his legacy that, we enjoy the same relation with the Jhunjhunwala family and the Rare Group. So we have never, he spoke on the last week that, Sudhir, we have so much good relation among ourselves that I never felt that I have invested it in my own company. So I can say we had a good relation. The thing which he gave me, because under his guidance, my son Ankur, he is a chemical engineer with MBA in finance, and he got 15 years almost training under him. So I think he became a blue-eyed boy of Rakesh Jhunjhunwala, and very happy that now he is controlling the company. So I can say he gave me that, succession plan. So I'm very happy. So regarding Amit, I can say, so after
Anything
invest,
bad you saying is about Amit Bakshi. Anything good, I'll take the credit. Yeah, yeah.
so Amit, I got as a good friend, a reliable friend, and I can say I could also rely him without any fear. It was fully reliable friend, I can say. So I got him. But of course, Quadria helped us all the time. They helped immensely in, bringing talent, even our constituting board with the experienced and expert people, which helped us in the journey of our Concord. So they also helped us, bringing some systems. They have a very strong global governance, so which helped us in, allocating capital and increasing the, I can say valuation and bringing a profit to the investors. So I can say when he was, wanted to exit because it was a fund, he also told me that, Sudhirji, I don't want to go out, but it is our fund. So that was the thing I can say. People told me before, bringing a PE investor that sometimes they are painful, but I can say that we had a very good experience with them and they were like a family to me. So I
Yeah.
will be very lucky to have him again
Yeah.
into our
So,
body.
Sudhirji, thank
Thank
you
you.
so much for those kind words. But let's stay with the theme of the PE guys. And Kabir, this is for you. Most people who are out here soliciting private equity funding, one of the words that they will hear ad nauseum is value creation. It's probably the most abused word in our industry. But I'm going to put you on the spot because there's no point. This is not a LP pitch to raise money. This is to the investee companies. Maybe some concrete examples of what you guys have done on value creation in a couple of your portfolio companies.
I think, like you said, a bit different from the rest of the private equity community. They will generally come and tell you, we will do these 20 things for you. And, it's easy to promise, right? You come in and say, look, I will give you money. That's one part, but I will help you with 15 different things. And I think earlier I said that 90% of value is created by the entrepreneur, maybe 10% by the investor. The areas where we tend to add value ends up being more, I think the first one is M&A, I'd say. We do help companies acquire adjacencies, brands, new therapeutic areas. The second is on hiring. I think once you professionalize the team, we come in, make some changes, obviously with the entrepreneur's blessing. But ultimately, the entrepreneur also plays the biggest role in hiring as well. Hiring teams, acquiring teams to start new divisions, that's been another sort of big area for us in terms of creating value. And last is for a lot of companies who are private and haven't gone through a listing journey in the past. We've done a fair bit on helping them list, selection of investment bankers, thinking through the right time to go IPO, thinking to the right strategy on capital allocation, thinking through who's your right next investor. I think these are some of the areas we've added value. I mean, rather than going to each company, I would still say that it's across these 3 or 4 areas where we see private equity adding value.
Thanks, Kabir. Sort of 22, 23 were pretty dry years for the IPO market. And now suddenly there seems to be this gold rush for everybody and the grandmother wanting to list. How are you seeing the market, not just this year, but in the medium term, the next 2, 3 years? And what should, especially the retail investors amongst us, be watchful for?
Yeah. So maybe I'll take a slightly longer term horizon and just talk a little bit about capital markets and what has happened, let's say, over the last decade or so. I think the one very substantive change in how the markets are today compared to 10 years back is borne out by this statistic. In all listed companies in India, the foreign ownership in FPI ownership in listed companies 10 years back was about 20%, and the domestic ownership in institutional domestic ownership was about 16%, totaling to about 36. Fast forward to today, that 20% of foreign ownership is today at about 18. Not, you think about it, it's not very different, but then when you think about it that this now is of a much, much larger scale, it's at 18, but the domestic ownership has gone from 16 to 30 of a dramatically larger market. So what does that, what am I trying to say? I'm trying to say is that the pools of capital that are available today are substantially more today as compared to 10 years back. Multiple more domestic pools of capital, multiple, whether it's institutional, which is mutual funds or insurance companies. There are homegrown private equity funds in addition to the international private equity funds. There are family offices that are now coming in and investing in a more structured manner from the wealth that has been created. So that's point number one. Pools of capital have gone up substantially. Second point that I make is that clearly markets are always a function of interest rates. And we know that globally interest rates have been at a bit of a high. To that extent, flows into domestic market from international investors have been lower. If anything, we are towards the end of the interest rate cycle. I mean, relatively speaking, the expectation that it would go up from here versus it would go down, I think the bias would be that it would probably go down. So we are probably looking at additional pools of capital also coming in from the international markets. Third is in terms of political stability. You take a poll around the room, you will come to an overwhelming majority conclusion that the government is going to come back, and that will add to continuity of policies and processes. And that's another checkbox. So all in all, I would say that flows into the Indian markets will continue to be very, very robust. We already have $2 billion of SIP flows coming into the market, into domestic institutions every month. That is expected to continue. So the flows are likely to be very, very robust. In terms of supply of paper, we expect IPOs to be anywhere between 2.5 to 3 times in the next 12 months as compared to the last 12 months. Last 12 months, by the way, it was almost 50,000 crores of IPOs that hit the markets. Many of them were much smaller. We expect the next 12 months to be IPOs that are much larger in size and scale. And we expect that to be quite robust. We expect that to be sector agnostic across multiple set of sectors, including many issuances coming from the new age sectors. So all in all, and the last point that I will make is that indeed there is a perception, more than perception, that Indian markets are relatively speaking more expensive compared to the rest of the world. But the fact of the matter is that it has been like that for the last 15 years. This is the market where you have consumers, where you have growth, and this is the future, in a manner of speaking. So yes, valuations have some scope for tempering, but I think that will likely come from earnings growth as opposed to necessarily prices substantially correcting. So all in all, I think the outlook remains robust.
Good to hear that. Amit, I'm going to switch a bit to M&A a bit. I'm seeing the industry, especially on the pharma side, beginning to transition from volume-based to value-based. And as you guys think of M&A? Is innovation a predominant factor of how you value the target? What are the various levers that you look at?
No, growth is the only and the major lever, right? Almost everything comes together if you are able to grow a business 2x in the first 3 years at a very, very fundamental level. So if you find that there is a possibility of growing it to 2x in the first 3 years, I think that's a good starting point. And then you have to be mindful of what you're doing, right? I mean, you asked me so politely. Some people, couple of days, asked me, "What are you smoking these days?" So, yeah, you have to stick to your own guiding principles. You should know, I don't know how will I sound saying this, but debt is something which you only understand when maybe it's a very thin line, you cross it and then you understand. You should be very clear about your capital structure. At every point of time, whether the thing is something which you have to give your right hand for, you have to be very careful. Then your strategic fit is very important. Nothing would work, the way I get the pitches some point of time, and this is a word where people are trying to build platforms. There's a new word called platforms. And a lot of private equity guys are trying to build platforms. So platform is like, a little bit what I have seen is trying to put anything together. And then getting to say, okay, if all this happens in this time, in this manner, with this kind of execution, it will give me, say, 100 crore rupees EBITDA. But I, for one, am not a big fan of that particular theory. So it has to be a complete strategic fit. We as a company and many of us would like to move up the value chain, right? We see there is some kind of if there is no destruction, then there is some kind of lesser moment at the bottom of the pyramid from a therapy point of view. So it's a good idea to move up the therapy. So you consider all those things together. And the more important thing is that you don't choose when you can acquire. It can happen, the other person is basically, So what happens, sometimes your capital strategy can go for a little bit of a toss because what is available today might not be available tomorrow. And tomorrow, if you are sitting with a load of cash and there is nothing available, then you only, sit back and kind of, repent over it. So this is not a buyer's market. It is still a seller's market in India, especially in the pharmaceutical space. So those are some nuances, which we consider. Once we make up our mind, we do make up our mind a little quickly for a lot of people's comfort. But once we are there, then we kind of walk the whole hog without doing much.
Well, your reputation in the market speaks for itself. So I'm glad that you say you go whole hog and it's done. Sudhirji, if you make the mistake of reading too many newspapers these days, this whole hype around China plus one, and then the whole logic around API. So beyond the lens of Concord, because I know specialization is your forte, how are you seeing it playing out? What is actually happening on the ground? How is the plus one happening?
The API, this became a household word actually after the corona. So everybody knew what is API and how much dependent we are on China. Actually, we started as a Concord, I can say we started in 2000 and we worked only on fermentation. So we understand leaving a few molecules like penicillin, cephalosporin, erythromycin, flavulonic acid. These are the molecules which India needs in tons. So that is where it is visible to the government also that yes, these products we need lot. And there was a scarcity also on these molecules, and Chinese people increased the price also of those molecules, and they became very expensive in India. So that is why there was a lot of talk about these APIs. But beyond that, there are many APIs which we cannot imagine. There are hundreds of APIs which we are dependent on China. But I can say that leaving those 4 5 which are quite tonnage based. So we are working every year, I can say, we are adding 2 molecules and we are stopping the import of those 2 molecules from China. That's what I can tell you. And not stopping that, we are registering our products in China and selling those products there. So that is the reverse thing which we have started. So I can say that, India is not, you can't consider that fermentation in India, you can't do it. I think we can do very well fermentation. Now the things have changed in China also, they have become more expensive. So I think this is the right time we should do. So China plus, when you say, the European and US people are also looking very seriously into the, our India. They are, earlier they used to go as a CDMO or they are getting it done in China. But now they understand that fermentation facilities are available in India also. So they are coming for their phase 1, phase 2, phase 3 clinical trial materials. They are, sourcing from India. So that is the shift which has taken place. But I want to tell people that when they say we are making API, 80% we are using, key raw materials here. But what about that 20%? That 20%, many people don't understand that 20% is made in China through enzymatic route. That also has a fermentation base, which we are not having. So ultimately, what we have to think that how we can start from the beginning to the end. That part we have to see. Otherwise, I can still say that we are totally dependent, even on chemical synthesis materials, on China. So that part, I think people have to understand very well. Even 5% on 10% basic key material, if it is coming from China, this means you are dependent on it. So
Yeah,
I think
well,
that part our people have to understand. And I can say many those chemical syntheses are still, they have 1 or 2 steps in the beginning only in enzymatic synthesis. So I think we have to go long way if we can say that, yes, we are self-reliant.
yeah, thank you, sir, Sudhirji. I am cognizant of time. Last question, and coming to you, Sourav. Amit alluded to these days the great theme of creating platforms and all the PR around it. There's also a lot of buzz around spin-outs and demergers. And from your perspective, is it actually creating any value in pharma?
Yeah, so let me first talk a little bit about spin-offs and demergers in general, and then talk about pharma a little bit more. So fundamentally, if I look at it empirically, in the 90s and the early 2000s, capital was scarce. So essentially, you had conglomerates get into multiple businesses. And many a time, these businesses had little correlation with each other, and the way they were to be perceived by the market were very different. And many of those businesses have gone and then they have done a spin-off and a demerger, and they've gone into different entities. Empirically, if you look at the data, demergers have created substantial value. In general, I would say that demerged companies in the next 3 years compared to at the time of demerger have outperformed itself by almost 10 to 15% per annum in terms of shareholder returns. In reality, you can never compare because the company together never existed at the same point in time. So how much of it came from business focus and growth, and how much of it came from just the act of the demerger is very difficult to separate. Now, if I extend that to pharma, there haven't been that many demergers. There have been a few, and the experience has been mixed. I think the fundamental reason for a demerger or a spin-off has to be if there are two businesses which have different business profiles and have relatively less of a linkage between the two. If the two businesses continue to have a substantive linkage post the demerger, or have a similar customer profile or a similar market profile, I think it's just financial engineering, and that's not going to lead to creating value. But indeed, if you have two businesses, or if you have some other non-business reasons to demerge, whether it's succession planning or anything like that, there is definitely value to be created overall, I would say. Something to be considered.
Well, with that, unfortunately, we run out of time. I wanted you to join me in giving a big round of applause to my fellow panelists here. And you can always grab them later for any further questions. Thank you.